What's the difference between a non-commercial trader and a managed money trader? At Peak Trading Research, we get this question all the time. If you're a professional agriculture trader, you know that hedge funds are the predominant price drivers in agriculture futures markets, but maybe you're unclear on the differences between these two categories. Today, we're going to go through the differences between these categories, and I'm going to tell you the 3 reasons that I prefer one versus the other. So let's get into it. Hi everyone, it's Dave Whitcomb from Peak Trading Research in Geneva, Switzerland. My goal is to make you a more profitable trader with commodity market insights and real systematic trading systems. A big part of trading agriculture markets successfully is understanding market participants. Hedge funds are the dominant participant in agriculture markets. We've talked about this in previous videos on this channel that hedge funds matter a lot for agriculture markets. They're the price driver. When hedge funds buy, prices go up. When hedge funds sell, prices go down. So understanding hedge fund positioning is important, but the CFTC makes this a little confusing because they put out 2 different COT reports with a managed money position and a non-commercial position. So what's the difference between a non-commercial trader and a managed money trader, and which one should you be looking at for your analysis and trading? Now, before we jump into that, let's back up for a second and look at all the categories within these 2 different reports. So if we look at the differences between the supplemental report and the disaggregated report, one of the first things that jumps out to us is that the disaggregated report has an extra category. All large speculators fall into the non-commercial report and the supplemental report, but large speculators are split up into 2 categories in the disaggregated report: managed money traders and other reportables. Now, this is the very first reason that I prefer the non-commercial position to the managed money position. When you look at the non-commercial position, you have the confidence that you're looking at the position for all large speculators. When you look at managed money traders, you might be missing some important traders like family offices or Chinese speculators, groups that are managing money but for themselves are not managed money traders. They're other reportable traders. So I really like that the non-commercial position wraps its arms around and quantifies the position for all large speculators. Now, the second reason that I prefer the non-commercial position to the managed money position is also just a function of my background and my experience. I was a trader at Cargill for 12 years. Cargill is one of the world's largest commercial trading houses. It is my experience that most commercial traders tend to reference the non-commercial position. Most hedge fund traders tend to reference the managed money position. So for example, if you were sitting in on a meeting at Cargill or ADM or Bunge and you heard their head corn trader say hedge funds are 200,000 contracts long corn, it's very likely that that trader is referencing the non-commercial position, not the managed money position. So again, that second reason that I like the non-commercial position is I feel like it's more often referenced by the world's largest commercial traders. And finally, the third reason that I prefer the non-commercial position to the managed money position is that I just prefer the supplemental report overall and the way that the categories are defined versus the disaggregated report. The disaggregated report, like we talked about, has 2 different categories for large speculators. It's got managed money traders and other reportable traders. And then there's the swap dealer category, which is just a mess. It has non-commercial swaps, commercial swaps, index swaps. It just isn't as clean as the index category in the supplemental report. So because I like the categories in the supplemental report way more than the categories in the disaggregated report, it follows that I would like the non-commercial position a whole lot better. So just to review the 3 reasons why I prefer the non-commercial position to the managed money position. First of all, the non-commercial position quantifies the positioning for all large speculators. The managed money category does not do that. Second reason is large commercial trading houses like Cargill and ADM and Bunge, they usually reference the non-commercial position, not the managed money position. Third of all, I really like how cleanly the categories are defined in the supplemental report. I don't like the categories in the disaggregated report. report. Now, the one big advantage of the managed money position in that disaggregated report is that it covers more markets. If you're a trader in the spring wheat market, or oats, or canola seed, or white sugar, or Robusta coffee, you unfortunately only have a managed money position. You don't have a non-commercial position reported by the CFTC for your market. Now, as we wrap up, there's one thing I want to emphasize, and that is if you're using either the non-commercial position or the managed money position to build systematic trading strategies, you are doing the right thing. You should not, for example, be trying to build trading systems around the index position or the commercial position or the garbage swap category. The non-commercial position and the managed money position are always the categories that will give you the best signals for your trading. As much as we've highlighted the differences between these two categories, they actually move in a very similar way. For example, if we look at the last 10 years, the correlation between the non-commercial position and managed money position in corn is 0.90. In wheat, it's 0.92. In soybeans, it's 0.98. These categories, as much as we've highlighted a lot of differences, really do move together. I hope you found this information valuable. At Peak Trading Research, we use machine learning to provide our clients with daily live estimates for non-commercial and managed money positions across all agriculture, energy, and metals markets. If you'd like a trial of our research, you can reach out anytime. Insight at peaktradingresearch.com. And as always, you can hit the like and subscribe button below for more great stuff from Peak Trading Research. Thank you for your time, and we'll see you soon.